Hi guys, today is December 28th, 2020, and very cheerful mood on Wall Street as President Trump is about to sign the COVID relief bill and stimulus bill that would help the American economy and extend the unemployment benefits. And actually, days after he said that he was gonna block it, but I actually tried to look at what's in this bill, and there are items in the bill that actually raise my eyebrows, such as like helping to other countries and like developing gender rights. So a lot of wasteful money to me. But and I didn't understand what where President Trump was coming from last time when he blocked the bill and requested the $2,000 payment to American citizens. But now I understand because he didn't want the useless items on a bill, and he wanted to divert this money to Americans. So that's just to me, and I'm trying to stay as apolitical as possible. So on a separate note, Dr. Fauci is warning that after this Christmas is going to be a surge in COVID infections because people are gathering, and obviously it's going to be more COVID to come. So and actually AstraZeneca is their vaccine is going to be approved in the UK, looks like this week. So that's good news. And on this note, Wall Street is very cheerful. So let's jump to SPY, ETF for S&P 500, and it looks like SPY is going higher, but it's trending in a flat line so far. So I'm not sure if this is going to go, it's going to jump or may dive. But in general, the end of December and the beginning of January are good time for the markets. There's a lot of fund rebalancing going on, and people are rebuying stocks, especially in January that they sold for tax reasons. And so I would expect the market would go higher, but second half of the January and February are usually bad times for the market, and we may see a pullback at that time. So far so good, but be careful. Okay, so let's jump to stocks, and before we do that, if you want to see my trades and on pretty much everyday basis, you can check out a link to my Patreon club in the description of this video. Okay, so let's start with BABA. Oh boy, poor BABA. BABA shares are falling, and as far as I know, they were falling in Hong Kong exchange overnight, like 8% or so. And because Chinese regulators putting pressure on Ant Group, and Ant Group is basically a financial arm of Alibaba, and Alibaba owns like 33% of Ant Group. And as you may know, Ant Group was going to do an IPO, and it was blocked by Chinese regulators. So obviously, Baba did some wrong, and I know that Jack Ma was criticizing Chinese regulators and Chinese government for lack of innovation and things like that. So that's kind of a wrong move in a communist country, because once you criticize the government, this is the worst thing you can do. So Chinese regulator is coming after Baba, Jack Ma, and Ant Group. So shares are lower, and I wouldn't touch it right now because this actually may go lower, but may go actually a lot lower. So I wouldn't touch it. But if it drops under $200, I would be interested actually. So let's move on to AZN, AstraZeneca Group. So AstraZeneca Group shares are higher after Japanese regulators approved AZN and Merck's Lynparza for treatment of ovarian, prostate, pancreatic cancer, and UK regulators, on a separate note, set to approve their COVID vaccine this week. And actually, CEO of AstraZeneca said that most likely their vaccine will be effective against the new strain that's going on right now in UK, which is like 70% more infectious than the previous strain of COVID. So, but they have to test that. So, in general, AstraZeneca shares, to me, is very low because besides COVID vaccine, they have a lot of approvals. They have a big cancer franchise, and I think it's very low, around $50. I think it's a buy right now. Okay, Dash. Actually, Dash and other other stocks that related to door-to-door delivery, food delivery, are on watch right now because California's new law that comes into an effect on January 1st will require delivery services to have stated agreements with restaurants to deliver food. But Dash said in its IPO filing that 95% of their actually food delivery is to restaurants with the agreement. So their shares are higher, but open shares are actually lower. Open door technologies, and I mean, California is a very strict state, and they come up with these laws that basically makes life very difficult for a lot of citizens and companies, actually, mostly companies. So open doesn't look too good to me because the Magda is crossing here, and I wouldn't buy open. I think open goes lower, but Dash could go actually higher. And, but in general, I wouldn't buy neither Dash or Open. If you want to buy something hotter or IPO related, I would actually I would buy ABNB. Yeah, ABNB is more much more difficult business to replicate than, for example, Dash. Okay, to me. Okay, BA, Boeing. So over the weekend, it was reported that Air Canada Boeing 737 MAX suffers engine issue on a ferry flight. I mean, the flight was like three people flight, and they received a warning that there was an engine failure, and they shut down one of that engine and landed safely. But in general, not good news for Boeing 737 MAX. Uh, but in general, I am actually bullish on Boeing because it was approved. It was approved recently by FAA, and companies such as actually Air Canada and Alaska Airlines and other airlines are actually started to buy Boeing, and hopefully it's going to be okay. So in general, I am bullish on Boeing, and actually I'm bullish on airlines. And speaking of airlines, and AAL is higher, and LUV is higher, and Delta Airlines is higher on this package that was accepted and was going to be signed by President Trump. Because there is a lot of aid to airlines in that package, and I actually like this setup for the airlines. As you can see, the 50-day moving average crossed the 200-day moving average, which called the golden cross, and shares are actually turning around. I think the airlines are a buy right here. Okay, so I would be interesting to buy airlines. Speaking of airlines, another company, AeroCentury. Okay, so it's a finance company which specializes in leasing used regional aircraft and engines, trading. It's trading high right now after the report that New York Stock Exchange accepted its plan for continuous listing. So good news for this company, but I wouldn't buy it at the open. I mean, it's jumping like doubling basically like 100%. So I would let it come down, and then closer to $3, I would say I would buy it. ACY. Okay, so Tesla shares are higher again. Once again, even after Gordon Johnson is a stock analyst at GLJ Research. Once again is questioning Tesla's valuation and criticizing Tesla that it's detached from its valuation, this and that. And it seems like the more Tesla is criticized, the higher it goes. So it's a funny thing. Every time the analyst comes out and bashes Tesla, it goes higher. But on a separate note, Tesla plans to begin operations in India in 2021. And in general, I mean, on the chart, it looks like it actually goes higher. And I wouldn't be surprised that Tesla takes on its all-time high of 695. So right now it's trading higher, and I wouldn't stand on its way. Shorting Tesla is suicidal, I will tell you that. Okay, so NIO is also criticized in the same report by Gordon Johnson, and NIO shares are actually higher right now. And frankly, NIO is looking not too bad on the chart. I actually think that NIO valuation is more ridiculous than Tesla because Tesla has a lot more things going for them than NIO does. But in general, NIO's chart is looking pretty solid. And right now, if this is MACD, will cross here, and NIO shares may actually go higher. Okay, MYOV. Myowant Sciences. That's okay. Myowant is higher this morning, pre-market, after report that it's collaborating with Pfizer on cancer drug to treat a painful disorder in the women's uterus, and may receive up to 4.2 billion, including 650 million upfront. So that's really good news for this stock, and I think shares may actually go higher. Okay, CRM. Okay, Salesforce.com, I mean, doesn't have particular news, but I like the setup. I think the shares also may go higher. And Peloton. Okay, Peloton shares are higher, but they're trading in very uncharted territory, like RSI over 80. So I would be very careful with Peloton, and I wouldn't buy shares here because it's very high. It needs to come down for me to buy it. And the last one I'll give you is Zoom Video. Okay, so Zoom Video, D.I. Davidson on Thursday names ZM its top pick for 2021, reiterates buy rating and $600 price target, developing on a separate note, they're developing email and calendar service. So in general, I don't like the setup for ZM, even though this analyst is very bullish, but I don't know if I'm very bullish on ZM. I think the shares may come down, so I would be careful with ZM. Okay, that's it, guys. Don't forget to subscribe to my channel, click the like button. Now I'll see you Thursday.